Eva Ados. She's Chief Investment Strategist at ER Shares. Eva, welcome. Let's kick things off with the Gap, which has been, to me, sort of a terminally troubled company over the past decade.
Yeah, I agree. It's a sell for us. It's in the news today with their CEO departing within a year. That's not a surprise to us because they're underperforming in all key three areas. SG&A costs are rising, gross margin is dropping, EBIT margin is dropping. They have by far the worst revenue growth and margins in its sector. And that's a company that saw a 50% increase in their inventory. And that's why the economy was good. We're very concerned what's going to happen to them in an economic slowdown. Will they have extra pressure on their margins and further markdowns?
Well, speaking of potential big changes in a business model, how about Peloton, Eva, where now they're outsourcing the manufacturing?
Yes, that's a sell too for us. And that's because out of the 56,000 global publicly listed companies that we're tracking, this is one of the worst, if not the worst, example of corporate greed. And that's because there was key insider trading of $500 million at the top of the market, $400 million in dollars in key executive compensation, while they had 1.9 billion in losses. That's why their gross margin was dropping, SG&A was rising. The fundamentals did not look good. They certainly did not justify such a big compensation. So we're concerned about their culture, about their management. There is nothing worse when an entrepreneurial company is managed by bad entrepreneurs, and unfortunately that's the case. So certainly not a buy. I would say sell.
We will have to have you back to talk more about that because you seem to be suggesting that the executives there traded out of the stock with some foreknowledge of what was to come. And we'll have to talk about that a little bit more. But meantime, we've got a minute. Let's talk about Southwest Air. Is there finally something you like, Eva? Finally!
So that's a buy, definitely. There's pent-up demand when it comes to travel. We see this today, as we mentioned earlier. And also, that's the company that has the biggest revenue growth in its sector. It's growing by 168%. They are improving in all key three areas. SG&A costs are dropping. Gross margin is rising. EBIT margin is rising at a 52-week low. And their valuation is similar to their peers. So definitely a buy.
All right, definitely a buy, two sells and a buy.
So much positivity for the airlines of all things today.
Yeah,
you know?
yeah, exactly.
Eva, thank you very much. Eva Ados for 3 stars.
I guess they don't fly.